Hello, everyone. Happy Friday to you all. Good morning. Good morning. Good morning, everyone. I'm so excited to be with you here this morning. I'm also very grateful for life. So I want to confirm that we are good to go this morning. So I would like to get some comments, get some feedbacks in the comment section that you can hear me clearly and you can see my screen. So if you do, just type hi in the comment section. So let's get this started. So I'll just try to load up my chat now and see if there are any comments rather, and then we just kickstart the live session. Okay, so what do we have here? Okay, I can see 961190. Good morning to you. 555. Thank you very much. 328. Good morning. Brazil 984. Oh yo yo. I guess you're excited. As happy Friday to you. Hey Carrie, good morning to you, Carrie. How are you doing today? 28280. I see you, Sajilo. Hey Scott Benji, it's been a while since I saw you. Trust you are doing well. And how is work? Okay, thank you, Carrie. Thank you very much. Thank you, everyone. And so I think on this note, I should take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you all to yet another promising session on the X-Trend Speed Live. My name is Sheriff Daramola. And for the next 1 hour, I'm going to be your host. While we dive into the financial markets to look at the current market structure through a comprehensive price action perspective. And we're also going to be exploring the recent movements and chart patterns to uncover key insights that can potentially shape our trading decision ahead of the New York session. And for those who are joining us for the first time, you are highly welcome on board. So I'm always very grateful and happy that we have newcomers in the house. And what we simply do here for the newcomers to know is that we gather here as a community, gathering in anticipation of both of the New York session. And during this time, we will be reviewing, managing our current positions while we also aim to position ourselves strategically ahead of the New York session. So once again, you are very much welcome. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So try to stay tuned in and continue to be part of the subsequent sessions, as the more time you spend with us, the more you will be able to use the information you have gathered here to make your independent decisions on your account. So once again, you are welcome. So today's Friday, the last trading day of the week, and you know how we do today. We always look at things from a psychological perspective, and it is expected that being the last trading day of the week, there is a likelihood of seeing some increased profit-taking activities which tend to occur on such days like this and potentially leading to price reversals. So we want to be keeping close attention to price movements and look out for signs that trend reversals are beginning to come in or weakening momentum along the line, so that we can catch the market shift in time. And what we are going to be doing today is to try to position ourselves ahead of these moves. And with that being said, you know how we do it. The first thing we are going to be doing this morning is to keep tabs with the fundamental aspect of the market by checking the economic calendar to see what the majority in the market will be looking forward to, as this could also serve as a catalyst that will help us to position ourselves ahead of the session. And you know how important checking the economic calendar is for us in this community. These fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. Now, on the economic calendar, we are going to be focusing on high impact events that will be affecting any of the pairs we've been monitoring so far this week, out of the US dollar, the Japanese yen, and of course the pound sterling. And we only have one high impact event coming up today, and that is the S&P Global Publication CIPS Services PMI, which has already happened about an hour ago. And this is an indicator of the economic situation in the United Kingdom services sector, and any reading above 50 is always considered to be something positive, while below 50 is seen as a contraction in the economy. And from the data we have here, the previous data came in at 55.2, and consensus were projecting that there will be a contraction, and then are projecting a 54.8. But as you can see here, the data that finally came in below expectation, giving us a deviation of minus 1.29, which is not a good sign for the UK economy based on this parameter. So we are going to be looking at how the market has reacted to this event, and we want to see how we can position ourselves on the GBPUSD ahead of the New York session. So with that being said here, we are going to be diving right into the business, and the first instrument we are going to be taking on from a technical perspective is the US oil. Now, on the US oil, we have a quite interesting situation here in the last 24 hours in this market, as we have been very, very profitable. So we maximized a bearish momentum yesterday. Remember, we were anticipating that if price action breaks down, retests the trend line, then we shall be getting ready to sell. And this was exactly what happened yesterday. I think immediately, during the live session, we had the breakdown of that structure. So we were anticipating two scenarios at this particular point in time. One of them was a retest of structure to happen before we join the bearish move to the downside, or the second one is to have a sell stop order below the $70.85 level, or a breakdown retest of that structure to join the bearish move to the downside. And in fact, this was what I was able to capture yesterday, as we saw the breakdown of the $70.85 level, and we were able to maximize the potential of that bearish move. As you can see, we kept on adding more positions at the breakdown of the key structures we identified yesterday. So we had a key level, had a $69.80 level, then we also had another run, had the $69 area, which happened to be the TP target zone we projected. So it was quite an interesting situation for us. Let's see what we were able to recoup from this one. If you are taking it from here, we had price move over 250 pips in our favor, and from this point price action has moved over 150 pips, and from the third position here, price action moved over 80 pips before we begin to see this bullish traction in this market. So first of all, well done to everyone who has been part of this profitable journey. Kudos to you for being on standby to catch this bearish move. Now, with that being said here, we shall be looking at how we are going to be positioning ourselves ahead of the New York session today. Now, for those who still have a sell position, because some of us will still have a sell position running at this particular point in time, if you do, well, the next thing you want to be doing right now, you know how we do it in this community. We want to move our stop losses to secure our position as soon as price action has moved significantly well in our favor. And from the look of things right here, I will be suggesting that you want to be having your stop loss anywhere above the $69 level and the $69.50 area. As you all know, we want to be giving room for price action to breathe, hoping that price action might still likely continue to the downside. So let's keep our positions well secured while we go into the details of how we are going to be positioning ourselves for today. Is it still going to be a sell position we are going to be looking out for, or are we going to be getting ready for a reversal pattern, especially considering today being the last trading day of the week? So with that information we've gathered here, so let's first of all look at the higher time frame. We want to look at things from an holistic point of view to see what has really been going on in this market for quite a while, and what did we see at the beginning of the week that led into the situation we have at this point. So in order to do this, we are going to be scaling up into the 4 hours time frame, and here we are on the 4 hours time frame. Now, so at the beginning of the week, we observed here that in the last couple of months, we saw the characters of sellers here by these lower highs we saw in this market. And in fact, we took into consideration the activity of price action since on the 25th of April, giving us this bearish trend line that you can see on your screen right now. But one important thing about this whole structure is that despite the lower highs we've been noticing, we are yet to see a lower low in this particular market, and this was as a result of the buying strength around that $67 area, as you can see here, since the beginning of the month of May. And one thing you would observe here is that every attempt by the sellers to break through the structure has been met with strong resistance from the buyers. We saw what happened here. We saw what happened here on the last trading day of last month, stroke the beginning of this month. We saw how buyers negated sellers' attempt around that area. And then a couple of weeks ago, we saw the same thing happened around this area, and as a result of this, we saw this as a very, very good zone to be used as a buying niche in this market. And we saw how price action climbed up into the trend line last week, and since the beginning of the week, we saw how the price action kept on consolidating around that area, which also shares a confluence with the trend line, and our key level sitting at the $72 area. So that was our key level at the beginning of the week, and we agreed that if price remains below our key level, definitely we want to be looking out for selling opportunity. So it was quite an interesting situation for us at the beginning of the week. We saw some buy positions, we saw some sell position. It was a little bit choppy before this huge engulfing bearish candle took price out of that structure to send price crashing to the downside. Now, with the information we have gathered here, let's take a quick look at what is going on in the market at this point. Now, if we extend this demand zone, that is the $67 level or area here, you will see that price action is gradually approaching that demand zone. Now, at this point, what is going to be our plans? Are we going to be waiting for price to drop back into this area? And if it drops into that level, we definitely want to see how price action will be reacting to that zone. Are we going to be having a situation whereby pressure will resume again, just like it has always done around this area, to incite another wave of bullish momentum? Or are we going to be seeing a situation where price will drop and break through the demand zone, taking out all the buy positions there to incite a sell-off in this market? So these are the things that we are going to be looking at. But in order to see what is really going on here, we would need to scale down into a much more lower time frame to see how participants in the market is currently reacting to that zone between the $69 and the $68 area to decide what our next line of action will be. So if we start seeing reversal patterns like buy pressure above that area, then we will consider this to be a higher low, which from a technical standpoint is a sign that buyers are gradually gaining momentum. But if we see price action transitions into a trend continuation pattern, then we will likely look out for selling opportunities that will either bring price into that demand zone at the 67 or even break through that zone. So with the information we have gathered on the 4 hours time frame, we want to scale down into the 1 hour time frame to make our decision for today. So now I would like to zoom into that area between the 69 and the $68 area, which is going to be serving as our center of focus for today. So we have a range already where price action since the beginning of today, during the early hours of today, we have seen it range between the 69 and the $68 area to emphasize the level of indecision at this particular point in time. So we're going to remain patient here to wait out and see how price action will be reacting to this level. And you know how we do it in this community. As soon as we see price action trapped within a range like this, we want to wait patiently for a signal to come, which might come in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. Now, with this information we have gathered, another thing I was able to come up with here, while trying to decipher what the next line of action will be, is the potential that buyers could likely come in. And one fact is, today is the last trading day of the week, and those who had sold will definitely want to be doing some profit-taking activity, which would reflect on the chart as a reversal move, where price will now move against the prior leading price action. And if we look at this from a technical standpoint, considering the impulsive bearish leg here, I'm of the opinion that we could likely see a reversal pattern. I saw one here which is gradually unfolding. Let's call this the left shoulder of an head and shoulder pattern, where this might likely be the head, and then we could have the right shoulder form up somewhere around here to incite a breakout before price climbs up. That is one scenario I'm looking at. And then another one is, if we look at this test of the $68.60 level, we saw this situation. Price dropped into the $68 area, and it appears price is coming back into the 69. So if we see something like a right shoulder where price finds it difficult to break down the $68.60 level, then we might likely be getting ready for a reversal pattern where the $69 area will be serving as a neckline for this potential reversal pattern. So what will this happen is that a breakdown of a breakout, let me find my breakout structure. Okay, so a breakout retest will definitely be an opportunity we are looking forward to hold on a second, so it'll be an opportunity to look out for buying opportunities around that area. So we would have had a reversal pattern around this point. So we want to take all this into consideration while we continue to monitor price action. Then another thing that could happen here, so after talking about the idea behind buying above the $69 level, one thing I also want to let us know here is, as soon as we have a breakout, and then once a breakout happens, we want to scale down into our lower time frame. It could be the 5 minutes, 10 minutes, or even your 15 minutes time frame, to look out for retest of structure and signs that buyers are gradually gaining momentum, which would reflect on the chart as buying pressure or double bottom structure to join a trend continuation to the upside. And please note that if the breakout of the $69 level and retest happens and we join, this is going to be considered to be a counter trend opportunity. And you know how we do it here. When you take a counter trend opportunity, you always want to be on standby to move your stop losses accordingly to secure your position, as sellers could come in at any point in time. So once you secure your position, then you can feel comfortable to watch the bullish move go to the upside. So let's keep this in mind. You might want to screenshot my screen, or probably mark out this level, which I think is preferable, so that you can use it as a reference point when you're about to make your independent decision for today. Now, in as much as we're looking out for buying opportunity in this market, you know how we do it in this community. We always want to keep tabs with the opposite expectations too as well. So considering the fact that price action has been very, very bearish since the beginning of the week, it is quite reasonable that we also consider the potentials the sellers also have in this particular market. And for me, at this particular point in time, I'm of the opinion that if price action goes on to break down the $68 area, then it's at this point I want to start considering either adding more position to my existing trade, and if you are not in any position at the moment, will be an opportunity to join a bearish move to the downside. So these are the things I'm going to be looking out for to sell the US All Spot today. So we do have a simple setup here where price action has been ranging between the $69 level and the $68 area, which will be our center of focus for today. So let's see how things will play out around the structure, and I wish you best of luck on this one. If you do have any questions and you want me to make further clarification on any aspect of what I just discussed, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the next instrument. All right. So in the absence of no questions, I want to assume that we're on the same page. So in that regard, I will be moving on to the next option on our watch list, which is the USTech 100. Now, on the USTech 100, we had a very interesting situation in the last 48 hours in this market. Remember, on Tuesday, we had a very strong bearish momentum to the downside, which gave us a minimum of 250 pips on that one. And then remember, we had the privilege of maximizing that opportunity by adding more positions, and we had another opportunity below the $15,000 area, which gave us also another 200 pips in profit. So we were roughly about 500 pips in profit going into the live session yesterday. And one of the things I told us during the live session yesterday is that we want to remain patient to wait and see how participants in the market will be reacting to this level around the 14,800. And one thing we said here is that if we are going to continue selling, we want to see price action break through the 14,800 retest of structure, then we could join up the bearish move to the downside. And the other possibility we said here is if that does not happen and we begin to see buy pressure around this above the 14,800, we want to be looking out for a reversal pattern that will help us to capture the bullish move to the upside. And if you look at what we have here, we had a neckline around the 14,850, and since then price action had continued to the upside, giving us about how many pips minimum on this one? Moved about 200 pips on this one before we begin to see what is looking like a retracement at this particular point in time. Now, for those who took advantage of this opportunity, well done to you for being on standby, as in total for this week, we are close to about 600 pips on the USTech 100 alone. So it has been a very, very wonderful week for everyone who has been part of this profitable journey on the USTech 100. Now, for those who still have a buy position, because there are some of us who will still have a buy position with the hopes to maximize the potential on this move, well, at this point, I will just suggest that you want to be moving your stop losses to secure your current position. And the most appropriate area I'm suggesting at this point should be between the 14,920 and the 14,900 area. Let's give room for price action to breathe while we hope that this trend continuation will still go on to the upside. Now, with a well-secured position at this point, what is going to be our next line of action for today? So before I I go into the details here, I would like to refresh our memories on what we talked about on the higher time frame as regards to this current structure, which has also helped us in making our decisions for the week. Now let's scale up into the 4 hours time frame. Now on the 4 hours time frame, this was what we were able to spot here. So we had, remember at the beginning of the week, we had a couple of trend lines on this chart, which has been a major determinant of price action in the last 6 weeks, I think. And we saw here, when we zoomed in, we saw how the 14,800 level has been a major determinant of buy pressure. We saw how it happened here last week. We saw it here too. And then we saw, as a result of this, we had that 14,800 marked out on our chart. And we said here that if this level, see how beautifully it shares a confluence with this trend line that we have here. So we said if we start seeing buy pressure above that structure on our lower time frame, we definitely want to be part of the bullish move. And as you can see, price action has continued to the upside. Now, with the situation we have right now and with our plans ahead of the New York session today, what do you think we can do based on this current market structure? So I would like to extend this $15,000 level further, as it's going to be a major determinant of our trading activity today. Then secondly, I noticed a lower high since last week Friday, which I would love to connect here. So let's have something like this. First of all, extend this out a little bit so that we can capture the whole length. And can I leave this thicker like this, or let's reduce? Okay, let's leave it like this. So we have a descending trend line here, which price action has consistently respected since the beginning of this week, as you can see. And one question we want to be asking ourselves at this point is that, will this turn out to be a trend continuation to the downside, respecting the trend line, breaking below the 14,800 finally to incite a sell-off? That is one scenario we are going to be looking at when we scale down to our lower time frame. Or are we going to be having a situation where this trend line will finally be broken, where the $15,000 mark will now become a platform for a demand for the USTech 100? So now, with the information we have gathered here on the 4 hours time frame, you can see that we are at a critical point where the potentials of sellers are still there and the potentials for buying opportunity is still there too as well. But when we scale down into a much more lower time frame, we could use certain key levels and patterns to position ourselves ahead of the New York session. So now, scaling down into the 1 hour time frame, the first thing I want to do here is to consider the impulsive bullish move we saw yesterday. And if we consider that, we have the situation, and after price tested the trend line, we saw something that is looking more like a retracement to the downside. And the question now is, how far will this retracement phase go? Is it going to be a retracement that will incite the next bullish momentum, or is it a move that will incite a sell-off if it breaks through the 14,800? Now, following the impulsive move here, we want to project where we want to be looking at the culmination of this retracement leg. So if we bring out our Fibonacci retracement tool, run it through the previous impulse leg, you know where we want to aim at, our golden zone area, which is always between the 50 and the 78.6% of the previous impulse leg. So I always like my golden zone area to be yellow in color. So I'll give it a yellow, and then I will now name it potential demand zone. So place it right in the middle, and here we go. Beautiful. So we already, sorry, let me place this in the center. Okay, all right. So now we have a zone to work with for today. So what this simply means is that if this is going to be a trend continuation pattern, we are going to be looking out for something like a reversal pattern within the zone that is between the 14,900 and the 14,850 area. So we want to be looking out for something like a double bottom structure, head and shoulder pattern, or even a falling wedge. We just want to see something like a reversal pattern that buy pressure is gradually building momentum around that area. Then we identify a neckline that we shall be looking forward to a breakout retest to join a trend continuation to the upside. So in the last couple of hours now, we have seen that price action is back within that zone. We have seen a couple of rejection of that area. So we are still going to remain patient here to watch how price action will still react to this level. So this might likely take about 2, 3, 4 hours before the position finally sets up. So we want to exercise some level of patience at this juncture to wait for structures to mature before joining any potential move to the upside. So let's see how price action will play out. But most importantly, we want to see signs like buying pressure, double bottom structure, higher lows, higher highs on our lower time frame. This will give us an insight into the potentials of the buyers at this point. Now, if price action goes on to break out of this trend line, remember this trend line has been supporting this bearish momentum to the downside. And then remember we had a key level at the $15,000 mark. Then a retest of structure will further confirm an opportunity to add more position to our existing trade. So this is how we are going to be looking out for buying opportunities on the USTech 100. So you want to mark out these key levels and zone so that you can use them as a reference point when you're about to make your independent decisions on this commodity, on this option rather. Now the next idea is to check the potentials of the sellers too as well. Well, if you ask me here, I would rather want to see price action take out the 14,800 level before I can start considering selling the USTech 100. And the reason is quite obvious. Remember, yesterday we acknowledged the 14,800 to be a strong demand zone, at least in the last couple of weeks, where we saw our price action has been rejecting selling pressure around that area. Now, if we need to sell, definitely we want to see price action take out all the buy positions around that area, which would reflect on the chart as a breakthrough of that structure to join a decline to the downside. However, it is also important that we take note of the strong bearish trend line after connecting a series of lower highs, where a tendency of selling opportunities could also present itself before the breakdown of the 14,800 happens. So if we want to maximize the bearish move to the downside here, what are we going to be looking out for in this chart that will make us feel comfortable to join a bearish momentum even before the breakdown of the 14,800 happens? Well, personally, I want to see how price will be reacting to that zone here that we identified as a demand zone. Remember, we said we are looking forward to a reversal pattern around that area, which will reveal the momentum in bullish, the bullish momentum there for us to capture a move. However, if price action gets into this area and it begins to find something like a lower low and lower high, then at this point, I will start considering selling, find an opportunity to sell there, then have a sell stop order below the 14,800 to capture the bearish move to the downside. So that is how we are going to be getting ready to sell the XAUUSD 100. And if you are a conscious trader, then you might just want to, if you don't have the energy and will to monitor price action around that 14,900 to look out for structures, then you could as well simply wait for the breakdown of the 14,800 where price action would have taken out all the buy positions here to give us a signal to join. Then a retest of structure on our lower time frame will now confirm the opportunity to join the bearish move to the downside. So that is my view here on the US Tech 100. If you have any questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions or inquiries, and you can as well use that time to mark these levels out on your chart and use or screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. So I can see Ness57. Good morning, Ness. Good morning, Papa 3. Thank you very much. Good morning, Dino. 799. Good morning to you. Eunice84. Good morning. Thank you very much. Of course, we are going to be treating the USDJPY in a moment, so stay tuned in. I think you're just coming in, you're just joining us, right? So we are going to be treating the USDJPY. It was a profitable trade yesterday. I hope you were part of that profitable journey. Okay, so in the absence of no questions, I want to assume that we are on the same page here. So in that regard, I will be moving on to the next instrument for the week, which is the GBPUSD. Now, on the GBPUSD, we have been selling this instrument since the beginning of the week. As you can see, price action has been more of a bearish turn in this particular market. And in fact, we do have a trend line which has been supporting the lower highs here. Remember, we acknowledged this trend line at the beginning of the week, and this was the yardstick that we were using to guide our trading activities. However, we made mention of the potentials of buyers too in this market after noticing how buy pressure resumed just around the 1.2700 level. And if you look at that structure here, in the past, it was broken to the upside last week, Thursday, as you can see here. Then we saw price come back to retest the structure a couple of days ago. And it was at this point I was telling us yesterday that if price action continues to remain above this level, that is, if this holds on to be a higher low that leads to the breakout of that trend line, we shall be looking out for opportunities to be part of a bullish move at that point. So we were saying that a breakout retest of that trend line will definitely give us an opportunity to buy. And in fact, I was part of a buy position there at one point. I think I was taken out at a stop loss. I was taken out in a loss on that one. I didn't know how you manage yours, but it wasn't a loss initially before we were part of a bearish move to the downside. And remember what I said here yesterday, that if price action does not persist above the descending trend line, then we are definitely going to be looking out for selling opportunities below the 1.27400 level. And look at what we had. We saw the breakdown, retest of the structure a couple of times to give us an opportunity to sell. So remember, we saw the breakdown here. So we saw the breakdown here, remember, and then we saw the retest of structure come in. We saw continued selling pressure along the trend line, and with a sell stop order, price action broke through the 1.27400, and then we saw price move to the downside. So at this point in time, you will currently be running with about 20 pips if you still have a sell position running at this juncture on the market. Now, if you do have a sell position running right now, I want you to be moving your stop loss to your entry point at this point. So your entry point around the 1.27400 level, or probably somewhere below that area, so that whenever price action takes us out of that position, it wouldn't be in a loss. And the reason why I have said we should move our stop loss at this juncture is quite simple. Now, look at what happened around the 1.27. We saw buy pressure here on Wednesday. And in the last 4 to 5 hours now, you will see how buyers have continued to negate all attempt by the sellers to break through that structure, which is a clear sign that buyers are gradually gaining momentum around that area, and that we cannot ignore the potentials that the buyers do have in this market. So going into the New York session today, what is going to be our plans? Well, For me personally, our center of focus still remains between the 1.27400 level and the 1.2700 area, where a breakout or breakdown of this range will give us an idea of where price action is likely going for today. And considering the fact that if a breakout of the 1.270 level happens, I'm going to be looking out for opportunities to buy, scale down to your lower time frame by pressure above the structure, and the trend line will be welcoming an opportunity to buy. And one interesting thing about the breakout of that resistant line at the 1.27400 level is the fact that it also shares a confluence with that descending trend line. And you all know this trend line has been supporting this bearish momentum since the beginning of the week. So if a breakout retest of the trend line happens today, then it will be a clear sign that the trend line may no longer have the capacity to negate the bullish momentum anymore. And this will validate the idea of buying the GBPUSD today. So for buying the GBPUSD, we are looking out for opportunities above the 1.27400 level. Now, with that being said here, we shall be moving to the idea of selling. Since we've been bearish since the beginning of the week, personally, I told you all that we should move our stop losses to entry point while we continue to monitor how price action will react to the 1.2700 area, which we have been seeing buy pressure at least in the last 4 to 5 hours. So for me to sell at this juncture, I want to see a breakdown of this 1.2700 level. And if you noticed here, we are yet to see price to close below this level. So if a breakdown happens, I want to see it close below the level. That will give me a sign that sellers are gradually gaining momentum. Then we scale down into our lower time frame, which of course the 10 minutes, 5 minutes, or 15 minutes time frame, or you can even go to as far as the 3 or 2 minutes time frame to look out for retest of structures, signs that buyers are finding it difficult to climb back above the 1.27 before we can start considering selling the GBPUSD for today. So these are my views here on the GBPUSD. Quite a simple setup we have here. We have a center of focus between the 1.274 and the 1.2700 level. So you want to mark these levels out on your chart, and let's use it as a reference point to guide our trading activity for today. So if you have any questions regarding what I just explained so far, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the chart and see if there are any questions before I move on to the next instrument. Okay, Eunice, you are welcome. I'm glad you found it very useful, and thank you for thanking me. Well done. Dino, you're welcome. All right, so in the absence of no questions, I want to assume that we're on the same page. So we shall be moving on to the next instrument for today, which is going to be, of course, the XAUUSD, I think. I think so. I think it's the XAUUSD, right? So yes, XAUUSD. So on the XAUUSD, we have a very interesting situation. We have been selling this commodity since the beginning of the week, in fact. And remember, we had our key level. See to it. Hold on a second, please. I need the seconds, please. I need to manage a position here. A moment, please. All right, so welcome back. And what we have been seeing since the beginning of the week was more of a bearish opportunity, as we have been selling, finding lower lows and lower highs in this market. So at the beginning of the week, we acknowledged a key level at the 1,960. And you know how we use our key levels in this community. If price remains below the key level, we obviously want to be looking out for structures and patterns that will support a selling opportunity. And if price action breaks out of the key level to the upside, then we definitely want to be looking out for patterns and structures that will support buying opportunities in this market. But if you look at what has been happening here since the beginning of the week, you would notice that price action has been trading below our key level, hereby emphasizing the importance of sellers in this market. Now, in addition to that key level, we acknowledge a reversal pattern here. Remember, after identifying this impulsive move here on Thursday, we saw price form the left shoulder of a head and shoulder pattern. We have the head, then we have the right shoulder around here, giving us a neckline at around the 1,955. And what we agreed here on Monday is that a breakdown retest of this neckline will definitely be welcoming an opportunity to sell the XAUUSD. And as you can see, since the breakdown of the neckline happens, price action had remained below the neckline and supporting the idea of selling the XAUUSD. So well done to everyone who has been part of this profitable journey so far this week. Then one interesting thing happened yesterday, which is a very, very massive signal in this market, and that is the breakdown of that demand zone at the 1,930 level. So for us to have a better perspective into this, we want to scale up into the 4 hours time frame. Now on the 4 hours time frame, if I would refresh your memories as regards to what we saw at the beginning of the week on this market structure, this is what we saw here. So despite the fact that we saw lower highs in this particular market, we were very conscious of selling the XAUUSD. And the reason is simply because sellers were yet to find a lower low, as we saw how the 1,930 level had continued to be a major barrier for sellers to break through that price. We saw how as soon as price gets into this area, we saw buy pressure. We saw what happened last week. We saw buy pressure. And in the last couple of days, we saw how sellers struggled with the buyers to keep up with the momentum here before we finally saw the breakdown of that demand zone here. So now that we finally have a breakdown of that demand zone, what is our next line of action? Well, if you look at this structure closely, from a technical standpoint, when price action breaks down a key level like this, we expect that one point in time price is likely going to come back and retest that structure at some point to incite a trend continuation to the downside. And if you look at this structure closely, in the last 12 to 16 hours now, you will see that we have been noticing some buy pressure around the 1,910 level. And the question right now is, are we going to be witnessing a reversal pattern that will bring price back into that demand zone? Now, depending on how price action reacts to the demand zone will now determine if we are going to be joining a trend continuation or buying the XAUUSD if buyers break out of the demand zone, coming back into the buyer's territory to incite another wave to the upside. So at this point in time, we want to see what is going on here, and let's see if we can be part of a reversal move back into that demand zone. And considering the fact that today is the last trading day of the week, remember we always witnessed increased profit-taking activities, and this potentially leads to price reversal. So we want to keep our eyes close to price movement around this area so that we can look out for signs of a trend reversal or weakening momentum in selling pressure around that area to join a move to the upside. So in that regard, I was able to identify a very, very simple setup that we can use to guide our trading activity today, and that I was able to do on a cleaner chart so that we can find things inspiring to see. So this was what I was able to see here on the 1 hour time frame. Very clean chart we have here. So what I did here was to consider the activity of price action in the last 3 days, and it's quite obvious that price action has been bearish. However, when price action tested the 1,910 level here yesterday, we begin to see some buy pressure around that area, leading into a situation here where price action has been caught within a range for the last 15 hours now. And one of the things I saw around this area is a potential reversal pattern, which looks like this. Let me show you what I mean. So following the impulsive move to the downside, we have something like the left shoulder, the head, and something like the right shoulder around here, where that resistant line of that range had the $1,916.50 level is going to be a potential neckline that will guide our buying opportunities for today. And as a result of this, to confirm this reversal pattern, we need price action to break out, retest of the 1,916 to give us an opportunity to be part of a trend continuation to the upside. And if price action goes on to break out of this bearish trend line, then at this point, this will confirm that buyers are gradually gaining momentum, and this trend line may no longer be able to negate the bullish attempt anymore. So a breakout, retests will also welcome more opportunities in this market to maximize the potential of that bullish move. So this is what I'm going to be looking out for to buy the XAUUSD today. So I'm going to be positioning myself just right above the $1,916.50 level to capture an opportunity to buy the XAUUSD. And if price action goes on to further break out of that descending trend line, we shall be looking out for more opportunities to buy. Now, to make things more simpler for us to be able to manage this position, I was able to identify a trend line after citing these higher lows in this market. So we saw higher lows giving us signs that buyers are gradually gaining momentum, giving us a vehicle that could drive the bullish momentum for today. So what we are going to be doing is to use that trend line to guide our trading activity. And what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in our buy position, while we also look out for more opportunities to maximize the move to the upside. So you want to mark these levels out on your chart and use it as a reference point to guide your trading activity for today. However, if price action at any point in time breaks through the trend line to the downside, then at this point in time, we want to consider this as a sign that sellers are gradually gaining momentum again. And considering the fact that this is a very, very strong momentum to the downside, remember, since the beginning of the week, we have been selling the XAUUSD. We want to be looking out for selling opportunity as soon as this trend line is broken. Now, remember, we are not getting too excited. We are not jumping into any position at that point. Neither are we having a sell stop order, but instead wait patiently for structures to mature. Now, once the breakdown of this bullish trend line, which I just shared with you here, happens, we want to scale down into our lower time frame to look out for confirmation, which will always reflect on the chart as a retest of structure. It could be the retest of the trend line or the retest of the 1,916 level, where we look out for continued selling pressures, which will give us signs that buyers are finding it difficult to maintain the momentum above the 1,916. Then we could join the bearish move and have a sell stop order below the 1,910 level to maximize this bearish move to the downside. So that is how we are going to be managing our trades on the XAUUSD today. So you want to mark these levels out on your chart and use it as a reference point when you're about to make your independent decisions on this account. On your account, sorry. So if you have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I'm here to be of help in that regard. So like always, I will be taking the next 10 to 15 seconds to read through the chart and see if there are any questions, and then if there are none, we will just move on to the last instrument for today. I'm already out of time, so I'll just see how I can run through the USDJPY before we draw the curtain for today. So hang in there. We are going to be talking about the USDJPY in a moment, so you don't want to miss out on that one. Eunice, are you still around? Let me know in the comment section. Okay, so 808, how are you? Good morning. Thank you for checking in. 283, good morning to you too. Thank you for checking in. All right, 1401, I can see you entering the house. You're welcome. All right, so in the absence of no questions, I want to assume that we're on the same page. So I will just move on to the last instrument for today, which is the USDJPY. And finally, on the USDJPY, we were able to scoop in a significant amount of profit after a couple of losses during the first half of the week. I remember at the beginning of the week, we acknowledged the a zone, a range where price action was caught within, and this lasted for about 3.5 days, I think. We saw our price action kept on ranging between the 142.00 level and the 141.500 area to emphasize the level of indecision in this particular market. And we all know why we had this level of indecision. As participants were not sure what the economic events that we were anticipating is going to be like. And one of the key things we could tell from the testification of the Fed chairman's speech before the House of Congress on Wednesdays and Thursday was that the possibility of a rate hike is still in the air. And as a result of this, you know what rate hike does to the dollar. It pushes the dollar to the upside. And during our live session yesterday, I told us here that the tendency of a bullish momentum is more than the tendency of selling the USDJPY. And I mentioned key factors here that is guiding, that's driving that idea of buying the USDJPY. And one of them is the fact that if you compare the activity of price action at the resistance line, which happens to be our key level for the week at the 142.00 level, compared with that which happened around the support line of that channel, you will see that there was more activity at the resistance line. And in fact, we saw attempts by the buyers to break through that structure. We saw the first attempt here. We saw the second one here, which gave us the first stop loss for the week before we joined the bearish momentum at that point. And then we saw another one here. That's 3. Then we saw another one here. That is 4. Before the final 51 happened here yesterday to do a breakout of that structure. And if you compare the number of times we've been seeing breakout of the resistance line to what we saw on the support line, you will see that for the support line, we only have twice. And for me, this is a clear sign that buyers are still more stronger in ensuring a breakout of this range than the sellers. Then in addition to that activity there, the frequency there, was the higher lows we identified. So this was the lowest point price action got to this week. Then we saw another higher low here prior to the New York session yesterday, giving us a beautiful ascending trend line, a beautiful vehicle to drive the bullish momentum to the upside. Now you can see what we are talking about here. We said fine, because of the situation coupled with the frequency of buyers along the resistance line, we shall be having a buy stop order above the 142.00 level yesterday. And thank goodness we saw how price action broke through that structure to trigger our buy position for yesterday. And we saw how price action moved significantly well. We also had a level here, had a 142.500 level to maximize the potential of this move. As you can see, we saw selling pressure here, and I told us yesterday that a breakout of that level will also be an opportunity to buy. So well done and congratulations to everyone who has been part of this bullish move. As we can see here, if you are taking one position at the breakout of the 142, you will currently be having about 130 pips in profit at this point. And if you are taking advantage of the second position here, you will currently be running with approximately 100 pips. So in the last 24 hours alone, we've been able to scoop over 200 pips in profit on the USDJPY, hereby recouping the losses we had during the course of the week. So well done, everyone. Kudos to you for being on standby to catch this move. Now, with this being said here, you know how we do it in this community. As soon as price action moves significantly well in our favor, we want to be moving our stop losses to secure the current position. Now, from the current situation we have here, I'm of the opinion that we want to be moving our stop losses to somewhere or anywhere around the 142.900 level so that we can give room for price action to breathe and wait and see if this momentum will continue to the upside or not. Now, with a well-secured position at this point, what is going to be our next line of action for today? Now, if we zoom into the current structure here and look at what has been happening in this market since the later part of the New York session yesterday, you would observe here that price action has been caught within a range between the 143.450 and the 142.900. So this is going to be our center of focus for today. And one thing about this range is that there is a tendency for it to transition into a trend continuation pattern, and it could also transition into a reversal pattern. So let's look at the potentials of sellers here first of all before we deliberate on what the buyers could do at this point. Now, if we zoom out and look at this impulsive move that started yesterday, you would agree with me that a retracement seems long overdue at this point. As from a psychological standpoint, for those who had bought at the 141.650, for instance, I will have made quite a lot of profit from this move all the way to the upside. And considering that today is the last trading day of the week going into the weekend, most people will not want to leave their positions open over the weekend because they don't know what will happen during the weekend. So there's a likelihood that we could be seeing some profit-taking activities going on today, later in the day, which could reflect on the chart as a retracement to the downside. So if this is going to be the case, how do we intend to join the bearish move? Now, since that we have a level here at the 142.900, we shall be using this level to guide any bearish move for today. So what we are going to be looking out for is a breakdown, retest of the structure in our lower time frame to join a bearish move to the downside, where our TP target could be between the 142.00 level and the 141.500, which will dovetail to, let's see how many pips that is, a minimum of 100 to a maximum of 140 pips to catch here. So that is one way to think about this kind of situation we have here. And secondly, I'm of the opinion that price action appears to be transitioning into what looks like a head and shoulder pattern, where we have the left shoulder, we have the head, and then price action is going through the right shoulder right now. Then we could have a breakdown to confirm this reversal pattern, where the 142.900 will be serving as the neckline of this reversal pattern. So let's keep this in mind. So we are only going to be looking out for selling opportunities if price action breaks down, retest the 142.900 level. However, if the bullish momentum continues to the upside at this case scenario here, we have a resistant line at the 143.450, which happens to be the highest point price action has ever been for this week. So if this level is broken to the upside, then definitely we want to be looking out for opportunities to buy the USDJPY. Well, for me personally, and for those who are already in profit on the USDJPY, you could afford to leverage on the profit you have made so far this week to test waters around that area, because normally we want to wait for a retest of structure before joining. But since you're already in profit on this one, you could have a buy stop order above the 143.450 to maximize the potential of this move. And if price action comes back to retest structure, we could be looking out for more opportunities to maximize that move to the upside. So that is how we are going to be looking at the USDJPY today. And our center of focus is simply between the 143.500 and the 142.900 for today. So let's keep this in mind. Mark these levels out on your chart so that you can use it as a reference point when you're about to make your independent decision for today. So if you have any questions regarding what I just explained or you need further clarifications, feel free to let me know in the comment section. I'm here for the next 10 to 15 seconds to see if there are any questions before I draw the curtain for today. Is Eunice 84 still in the house? Let me know in the comment section if you are still around. I want to know if you didn't miss out on that session. Let me know. Okay, so in the absence of no questions, I want to assume that we're on the same page. So on that note, I will draw the curtain here. It has been a wonderful moment with you guys. It has been a wonderful week. In fact, a very, very long week we had here today, as it took quite a while before we begin to see some traction that made us to scoop in some profit for today. So it has been a wonderful week. Thank you, everyone. And congratulations to those who are part of the profitable journey we had this week. I look forward to seeing you same time next week as we start another fresh little look at the market, where we hope to also maximize some trading opportunities in the Extreme Speed Life community. Thank you, everyone, for being around. Okay, I see your comments, Eunice. Oh, all right. I hope you didn't miss out on the explanation on the USDJPY. So on this note, I wish you best of luck today. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we talked about today. And trust me, the more time you spend with us in this community, the better you become in using the information you gather here to make your independent decision on your account. So I look forward to seeing you guys same time next week, 10 a.m. UTC, 11 a.m. West African time, as we come here again to start a fresh new week with new perspective to look out for more trading opportunities on the Extreme Speed community. Do have a wonderful evening and a very happy and splendid weekend. Bye-bye.